Good morning and welcome to the new episode of Dr. Lamba's Awakening. Recently, three banks collapsed in US. Is something really brewing? Was it a calculated move or just a coincidence? The collapse of the three banks all of a sudden is a very dangerous sign. Unfortunately, the policymakers are not taking it very seriously, and that is amazing. It's a matter of global concern. And yet, today morning came the news of Credit Suisse. So, following that, and as I said, it's a matter of global concern. But then, coming back specifically, are the Indian policymakers keeping a watch on the development and are they prepared? Yesterday, the long brewing trouble at Credit Suisse group of Switzerland exploded in a full-blown crisis. The stocks and the bonds crashed, and this is the world's biggest bank. Result: all the banks raced to shield their finances from potential stockouts. The stocks globally fell by 31%, hitting the second low, a record low as a matter of fact. This is a record low for a long time. 31% fall in a few hours. Prices on its benchmark bonds sank to the level that indicates the Swiss lender is in deep financial crisis. The same thing that happened with the three American banks, and that has happened something rarely. And for the first time since 2008 crisis, such a major global bank crisis has arisen. And the banks that trade with Credit Suisse snapped up the contracts. They tore the contracts. This is known as credit default swaps, and that will compensate them if a crisis deepens. One bank, BNP Paribas, went a step further and informed the client that it will no longer accept requests to take over their derivative contract. When Credit Suisse is its counterparty, according to the people familiar with the matter, and when I was informed about it, I received a call at about 4 in the evening that this has happened, and that set me thinking. Now, this adds to the steps that many banks in the US have taken over the course of months to reduce the exposure of the lender. But this crisis was told earlier. Nobody bothered to listen to it. And a week ago, all was very well with the US financial system. They were all happy. They could not foresee the disaster coming. And then the three banks that collapsed, with Silicon Valley Bank being the most consequential one. The American regulators, aware of the gravity of the situation, have invoked exception clause in their playbook to ensure that the deposits that weren't earlier covered. Their hope is that it will tamp down the panic and prevent a contagion. Bank run out is a very contagious disease. One bank falls and people get crazy and make lines and withdraw their cash, and consequently the other banks start failing. And given the size and influence of the US financial system around the world, all the financial institutions around the world, all the stock markets are trembling with fear. And the regulators harbor no hopes. The collapse of the Silicon Valley Bank and signature banks sent ripples through the financial market across the world. Stock market sank in Asia and faltered in Europe. At that time they fell by about 12%. And yesterday, as I told, after Credit Suisse issue, they fell by 31%. An investor who was talking to me about 3-4 days back predicted that another bank is set to collapse. And he's one of the best known. And he's the guy, Robert Kiyosaki, who predicted in 2008 the fall of Lehman Brothers. And he has told about a week back that Credit Suisse is the next bank at the risk of collapse. And within a week, his prediction has come out to be correct. The problem is the bond market. And that destroyed Lehman Bank, and that is now destroying Credit Suisse. The Rich Dad Company co-founder, Kiyosaki, Robert Kiyosaki, he said that the bond market will put US in serious trouble. It will weaken the American dollar. And that has a consequence which people can't even believe. Once the American dollar collapses, you can be sure that the currencies around the world are going to be hit. Normally people forget that the bond market is much bigger than the stock market. They keep the Sensex, the Dow Street and others, but the bond market is the real thing. And that destroys the banking system if it is fallen. The federal financial system, the policymakers, they are up and ready like firemen. But the US dollar is losing its hedge money. Now the feeling is coming that China, with this economic clout, is somehow or the other playing havoc with the bank. I don't know it is doing that. But what's happening in USA is that the dollar is losing its pre-eminent situation in the world, throughout the world. So what's the way out? They'll print more money, more and more, because they'll try to keep the dollar from sinking further. And when they print more money, it will be inflation. And on the one side, people's money has been wiped out of the banks, and then the prices are going to rise. The failure of the Credit Suisse, which is the world's 8th largest investment bank, is going to cause bond market to crash, and the retirement of this generation is in danger. So I would strongly advise exploring and buying into silver and gold investment during this volatile market. And when the prediction of Robert was there, after a few hours, Credit Suisse admitted to a material weakness in its reporting procedure for the last 2 years. That's 21 and 22. And when there is a failure in the reporting system, there's something drastically wrong. A week and the bank has collapsed. And what's that material weakness? That has been identified related to the failure to design and maintain an effective risk assessment process to identify and analyze the risk of material misstatements. Credit Suisse has endured a barrage of problems in recent years, including exposure to the implosion of US asset manager and UK firm Greenskin. Since 21, Credit Suisse has lost 80% of its market value. And this now fall is going to escalate it. Now, I'm talking of India. There are two reports which warned of the risk to Indian financial market in December of 22. Reserve Bank of India's biannual financial stability report flagged it. Did anybody bother to react? No. In January, the economic survey highlighted the risk of financial contagion. Now step back and look at the context. Last year, the world witnessed the most synchronized monetary tightening in 50 years by way of interest rate increase. All over the interest rates increase. The tightening happened to be faster than normally seen. It has never been seen earlier. And it was taking place immediately after the build-up of private debt when the interest rates were low. And a surge of inflation in 22. In short, this was a perfect recipe for a perfect financial disaster. If you ask me why, well, these conditions make it more likely that the poor investment decisions will be caught out, they'll be destroyed, go bankrupt. India is not liable to escape. It's not vulnerable. There is one positive thing, that in the second quarter of last year, 22, the average core debt of the Indian non-financial sector was 248% of GDP globally. In India, it was 170% of GDP. So a difference of 78%. But the government debt was 82% of GDP, and the globe average was 88%. So they were almost the same. But it would be foolish for the finance ministry to drop the guard based on the historical data. IMF pointed out last year that this year was a year in which debt ratios would improve globally. It hasn't. Because nominal GDP grew fast following a surge of inflation. So one of the lessons of 2008 is, which is often forgotten, and that's the invisible links between the balance sheets of the tightly regulated entities. You remember the convulsions of the Indian money market in 2008? It took the finance ministry and the policymakers by surprise. And heightened risk to the financial stability in the backdrop of inflation and increasing rates is important for Indian policymakers to be prepared. Do not forget, global financial markets are intimately interconnected. And it's hard for any country, let alone an emerging market like India, to decouple itself from the world. And that should send a red signal. I have recently no contact with the finance ministry, but I hope they have learned their lesson and they are taking necessary corrective steps. That is a need of the hour. Any delay would be disastrous. Thank you.